Good morning and thanks so much for tuning in. You're watching Ask BQ on BQ Prime. My name is Alex Mathew. As I look at the screen, you have the benchmark Nifty 50 that's trading with cuts of about 1/3%, but still holding above the 19,600 mark. A lot of individual stocks to focus in on. And well, this show, like the name suggests, aims to get you answers to all of the questions that you might have about those stocks. Without further ado, let me get in our guests for the day. We've got Vivek Karwa, the Chief Executive Officer of Vriddhi Investment, and Brijesh Ail, the Head of Retail Research at IDBI Cap. Thanks so much, gentlemen, for taking the time. As we normally do on this show, let's start with a segment that I like to call Ask BQ Focus. And today, I think the focus is on Bajaj Finance. And it is by and far and away the best performer on the benchmark index on a day when things aren't looking so hunky-dory, right? This is a stock that is gaining over 4%. And this, I think, Vivek, is on account of the fundraising plans that are being discussed. The board is going to meet early next month to discuss raising of funds, possibly through a QIP. They could raise as much as $1 billion, which could amount to about 15% of the net worth of the company. Quite a significant amount of money being raised. What are your initial thoughts about this at a time when the company is growing its AUM at over 30%?
Good morning, Alex, and to all the viewers. Overall, it is positive news for Bajaj Finance because there was a lull period in between wherein people were confused. In fact, investors were confused like what is going to happen to the company, particularly because the valuations were high on the first account. And secondly, Jio also coming in, and many people were fearing that Jio would really disrupt the market. Now, slowly the sense has prevailed, and I think everybody will have their own market share, and Bajaj Finance is not going to lose as such. So, what is going to happen is approximately there would be around, as per estimates, between 10 and 13% PVPS accretion due to this 10,000 crores being raised. So overall, I think there might be a 20% growth, which might be seen over next quarter. Next few months once the fundraise is done. So overall positive, and I think at 7785, short term the valuations might look a bit stretched, but I think longer term it could again test your 8,500 to 9,000 levels.
Okay. All right. Brijesh, coming to you on the technicals then. Of course, the stock is effervescent in trade today. How should the short-term trader look at, or how should the trader look at Bajaj Finance?
I think, morning, Alex. So I think today definitely this is the range breakout and it's a volume candle. So I think the continuation of this trade momentum will be there. I think the 5th October is the board meeting where they are going to get the approval for the same. So I think till the time and the news is out, so I believe this momentum will there. 8,200, 8,400 should be the immediate upside target, continuation of the trend. And in the longer time frame, I won't be surprised if we see 10K plus, because the way the monthly charts are poised up, it's look like it can be a more of a range, larger range breakout, which we can talk of 10,000 over the couple of months. But then from the current scenario, I think this momentum will rally towards the 8,000 level. So once you hold on the position, there's nothing wrong in the chart. So I think it's a positive bet.
Okay. Vivek, I didn't get your recommendation on Bajaj Finance. Is it a buy at this point, or would you avoid? Would you wait for prices to settle a bit before you jump in?
I would not jump in today, but it's a buy, Alex, because this fundraise is going to happen slowly. So 5th October is the meeting, so still 10 days to go. So what would happen is maybe tomorrow, day after tomorrow, once the things are, say, well settled in the market, there might be small profit booking on the stock. At that point of time, definitely be a buy. So short term also, I think this stock is going to do well, and hence it's on the buy list, and I would start adding probably tomorrow.
Okay. Just a reminder to all the viewers tuning in, do send your questions to us on any one of our social media platforms, or indeed on the WhatsApp number that should be available on either the comments or otherwise. In fact, we've been flashing it on the screen just a short while back. But for now, let's take a couple of questions that have come in already. We've got Mihir Desai asking about Ultratech Cement. Can it be bought at these levels for the long term? This is as a fundamental play. Vivek, I'll come to you first. And then on the technicals, we'll take a check on Ultratech as well. Vivek?
Uh, Alex, what I find is Ultratech short term it looks a bit stretched because the cement sector as a whole as a pack had run up, and at valuations of approximately today we're talking about 45p, wherein you also get similar say cement stocks at 30 and 35 PE. So overall, yes, absolute long term the stock might do well, but shorter term I find the stock to be a bit costly. So profit booking on rise would be advised, and if the stock sees some kind of correction at that point of time, you should re-enter. So short term, yes, negative; longer term, positive.
All right. What about you, Brijesh? What's the view on the charts for Ultratech Cement?
Yeah, so I believe there has been a profit booking in the Ultratech Cement, and in the last Friday session, it has broken the 50-day moving average, which is at 88,300 mark. So somewhere there's a weakness, and eventually this rally has started from the level of 7,800. So I believe it is poised to touch somewhere close to 8,000 mark. So 8,000 is a reasonable level where I think it might take some support. So one has to keep a watch on the counter. So slight more decline, close to 200 to 50 points correction is due. So I believe close to 8,000 again the re-entry or maybe the averaging structure can be done. Overall, I think it's in an uptrend. It's a fundamentally I think it's a we are having a quite strong view on the Ultratech. So I think another 200 points of damage is there. Close to 8,000 is what I think it can take support.
While we're on the subject of cement companies, Ultratech is something that we've just discussed, but do you have any other suggestions in the space, or do you think that Ultratech out of the pack, Vivek, is the best play to have?
See, if you really look at safety, then Ultratech and Ultratech would be the best. But what I find is smaller cement companies like Ramco Cement or even Mangalam Cement look more cheaper compared to Ultratech. And maybe if the market again recovers back about 20,000, these stocks might actually outperform Ultratech. So you have to look at what kind of investor you are. You want to be safe and steady returns. I think Ultratech would be a better bet on dips. Otherwise, smaller companies like Ramco Cement would be my preferred choices.
Okay. Moving from cement to another integral part of the infrastructure story in this country, which is steel. And we've got Saloni who's asking about steel companies and which steel company can be bought at the current level. We've seen quite a bit of volatility, gentlemen, in the metals pack. Questions being raised globally about growth, particularly in China. There are some murmurs about the real estate sector being propped up in China, but then again, questions about a few large real estate companies there. I think that's affecting metal prices and demand globally. But of course, domestic steel companies primarily cater to India, especially in the long steel products area. What, according to you, is the key play here in the steel space? Vivek, I'll start with you, and then I'll come to Brijesh on the technical levels.
Say, Alex, again, what we are seeing is a lot of news flow from China. As you said, they're trying to revive the economy and give some kind of incentives to the real estate segment, particularly because their largest real estate company has gone bankrupt already. So, but what I feel is over so many years of experience that artificial, drugs cannot improve a sector or the economy. It has to be structural changes, and which would take time in China. So I find steel and overall metal pack would be in a range, and it would depend on India consumption and how Indian government again is how aggressive they are on infra. So I find Tata Steel to be a good bet. But if it comes below, say approximately at 118, 120 levels, it's at 127 levels. So longer term, they next 2-3 years, they would totally become debt free, and the company actually would start doing well. But be ready to see, say, bigger cycles in metal stocks, because you will certainly find dips and good run-ups as well for commodity prices. So you need to have that knowledge when to exit and when to enter.
Okay. We've got a question on WhatsApp. Seema Agarwal has written in and said that she's bought 2,000 shares of Zomato for a price of 47 rupees each. It has gained well, she says, but she's wondering whether to hold for the next 2 to 3 years or sell at the current market price. So first, we'll take a fundamental view, and then Brijesh, I'll come to you on the charts. Vivek, what's your view? Zomato.
In fact, Alex, people should read what Ashwath Damodaran has written today on Zomato. He says value shouldn't be more than 36. Now, of course, I disagree with him. That's officially there. You can see it on his Twitter handle as well. I find that Zomato might come into profits over next 1 or 2 quarters. So that would give the stock support, and in expectation of the profit, the stock has already run up. In fact, I had bought it at 49 and sold above 100. So it's below 100 again. So what I would do is I would wait for this quarter results and then re-enter if really necessary. So at 85,000 crores market cap, even if they're going to declare profits, I find a little overvalued in short term. But again, they have huge cash pile which is sitting with the company, and all bellwethers are there that they can actually capture the market further going on. So if the quarter is good, I would enter. Otherwise, I would wait and watch.
Okay, what about the technical view then, Brijesh, on Zomato?
So if we see the Zomato, the monthly chart, the selling has come in the month of Jan 2022 from the levels of 143. So I believe this trend would be, we can see the momentum towards those levels. Definitely, maybe next 1 or 2 months, there can be some profit booking. It might come close to 80 levels. But then if you're somebody holding a view for next 2 years, so I think it might go back to the levels from where the selling has started. So this 143, 145 is the zone. So somebody wants to take a view for the 2 months kind of a time frame. I think one should hold the positions close to any declines to 80, 75 levels. I think that can be again a re-entering buying opportunity. I think it should be a hold from the long-term perspective.
Okay, and I didn't come back to you on steel companies in particular. What do you think about where they are at right now based on the kind of price action we've seen over the past couple of weeks?
Yeah, so specifically in steel, we are quite bullish on the JSW Steel. The reason is quite simple because again, it's on in the month of June, we have seen a very good breakout in the June, and that has been supported by the delivery volumes. So that this clearly hints that the JSW should be in near term 950,000 should be the target for the JSW. So whenever the metal sector there is a mine, JSW should be the one pack which will outperform. So recently, whatever the declines, corrections we are observing, I think it's a buying opportunity. Maximum correction in the JSW can be seen somewhere close to 740, 745 level. So that can be the maximum correction as of now, which I believe. And from 750 to 950, this 200 points range is there for the JSW still. So it's one of the positive bet. After JSW Steel, so stock which we are liking is it's not exactly the metal, but then Hindalco is one sector which we are extremely bullish, and I think close to 550 is the target for the Hindalco. So somebody wants to take a position even at the current price. Recently, the stock is corrected. So this, I think, it's a very good opportunity to re-enter. We are talking of 550 on the higher side from the technical point of view.
Okay. Going to another pack of stocks, and I think we've discussed in the recent past, but it bears repeating, IT as a pack. And we've got Vishesh Patel on WhatsApp who's asking whether it's the right time to buy IT companies and which stock would you suggest based on the fundamentals first. Vivek, what are the factors that you would watch for? Of course, we're still a little way off from understanding how the second quarter has panned out.
I think, again, IT would be the first pack which would start declaring results. So I would wait again for that. And particularly because IT index is actually doing well in the markets. So, Alex, what I feel is if somebody really wants to enter IT, it should be in mid-cap IT stocks, which have more focus on Indian business, that is, they do business locally. Than larger companies, which also have a lot of effect from US and other developed nations, wherein things are still not clear, like what is going to happen. So I find smaller IT companies, for example, First Source Limited, not purely IT company, but yes, similar sort. I think that looks really good to me for at least 15-20 rupees rise from here. And Zinsa Tech looks good. So these are companies which have which are mid cap, and easy to. I feel that yes, since they have more focus locally, they would be easy bet than the larger ones. So I would avoid the bigger ones.
Okay. Very quickly then on the charts, what specifically mid-cap companies, since we're talking about mid-caps first, which mid-cap IT company looks good on the charts, Brijesh? And out of the large caps also, which one would you suggest?
So there are only two stocks in the mid caps. One is the Persistent, and then our next one is the Emphasis. These are the only two bets which we are positive on the card. But having said this, from the large cap space, I think there is some kind of change is going to happen in the TCS as well as the Tech Mahindra. I'm strictly talking from the charts point of view, because the way the monthly charts are formed, it clearly tells me that this pack is now going to lead. Like all this while IT was quite underperforming. Recently, the mid cap space was seeing some kind of move. But then now suddenly there is a structural change in this, both the Tech Mahindra and the TCS. So Tech Mahindra, we are extremely bullish. I think even though if the market corrects, I don't see a much bigger correction in the Tech Mahindra. We are talking of 1380 as an immediate level, and then gradually 1500 would be the level for the Tech Mahindra. And TCS is again, if somebody wants to take a position, it's just moving out of the range. And we should be talking of the all-time high level, which is somewhere close to 4,000 levels. So I think both these stocks are extremely positive. The sector is going to perform. All this while it was sideways. The charts are very clearly telling me that the TC and Tech Mahindra would be the next big bet on the IT charts.
Okay.
IT sector.
We've got a viewer who's asking specifically about KPIT Tech. It's not something that you've mentioned, gentlemen, but Vivek, would you suggest buying at the current level?
Like I had bought it at 300 levels, and now it's about 1,000. So valuations really look very, very stretched. But I feel companies specializing into this charging space of EV vehicles, and they deal in that technology. So I think if somebody is holding, yeah, you might not see much returns over next 1 or 2 quarters, but longer term, yes, the stocks actually companies looking very, very good. So short term P is approximately 68, which is quite high. But since the space is growing, I think the company also would keep growing, and that's the reason it is commanding higher P. So you should hold it on.
Okay, I'm going to club the next couple of questions because it more or less has a similar leaning. We've got Sajid Devgan and we've got Pratik Banerjee, both on WhatsApp, asking similar questions. One is asking, if I want to invest 1 lakh rupees in the stock market for 3 to 5 years, which sectors or stocks should I invest in? And Pratik has got a more, if I may say so, nuanced question. With markets correcting from recent highs, should we start buying growth or value stocks from 1 year perspective? Vivek, I'll come to you first.
See, sector-wise, I would prefer pharma, because there is one sector which is still underperformed. And next, in fact, I had tweeted about this also. Next few years, there are developments which are happening in pharma, and I find that US, in particular Indian pharma companies, are going to benefit out of it, and US actually doesn't have capacity. So you should look at pharma for next 1 year. And if you just have 1 lakh rupees, I would suggest not to buy individual stock, because you should be diversified if you are going sectoral, and hence a pharma fund would be more ideal bet. And I'm sure you will at least make 15 to 20% CAGR.
Okay. I'm going to avoid taking a technical view on that, because I think this more or less was a question on the fundamentals. But we've got a question from Anil Dahefale. He's bought at levels of, HFCL at levels of 72 each. He's got 5,000 shares, so quite a large holding. Brijesh, what would you suggest that he do with this? Should he hold or should he sell?
HFCL, to be very frank, I don't think there's any strong structure over there. The 85 to 90 is the higher side resistance zone. So it will be very difficult, but then just in case, right now the stock is correcting, and it looks like it might correct further towards the 68 levels. So it would be nice that if we see some support coming at 68 levels, then the bounce comes. So, but my view would be closer to 80, 85 level. It would be it would be okay that we exit the position and take something on fresh stocks.
Would you, so in this case, considering that he's bought at levels of 72, would you suggest keeping a stop loss? What stop loss would you keep?
So the precise stop loss which I can say is I think I'll go with the 65 as a stop loss and hold on the position for 80 levels to come.
Okay. Abhiram Pendarkar is asking about Infibeam. I'm just pulling up the chart as I speak, but on the fundamentals, Vivek, do you have any view on Infibeam? He says that he's got a large holding. He's not told us what level he's bought at, though.
See, these are speculative counters, Alex, and what is happening in the company and what they are projecting, will it happen? It's all big question mark. So I would not take that risk. Yes, if you really want to gamble or say just bet on it and depend on your luck, probably small holding is fine. Wherein if it really does well, make. Otherwise, at least you don't regret. So big quantity surely not advisable, and balance depends on your luck, because fundamentally I don't find anything.
Okay. Madhulika has got a question on Schneider Electric, and this is, she's pointing to the latest news item on this counter. The stock is announced, or rather the company has announced a 3,200 crore capex plan that will take them to 2026. Would you suggest that the current levels are good to enter, Vivek? And I'll come to you on the technicals after that, Brijesh.
So it's fundamentally good counter, particularly it is L&T company today, and everything else is good, but valuations are really stressed, a lot stressed. So I would suggest on dips, surely you should buy this. This is not going to lose you money. But when it's already 11% up on a single day, entering it would not be advisable. So on dips, yes. Longer term, yes. L&T company, so nothing to worry about.
Schneider Electric on the charts then, weight is what Vivek's call is on the fundamentals, but what do the technical levels suggest?
So Alex, the way I again look from the trading point of view, because today definitely there has been a very good amount of buying volumes. So this will see some good upside momentum for the next couple of days. Today close, I think if somebody is willing to take the risk, then with the 330 as a stop loss, I think one can take a target, because I think it's going to stay positive for next couple of days. Purely a trading perspective, I don't want to take the positional view. This from the current level, I think it may go to 420, 430 levels. So the risk, the stop loss would be 330. If somebody can take that risk, then it's a buy at the current price.
Okay, one last question. Anil is asking about RVNL. If I remember correctly, the stock had gone up quite significantly on Friday. It's up another 2% today. He has bought at levels of 128, so he's sitting on quite a bit of profit on this. Should he hold on for the long term is the question, Vivek.
See, long term is say a challenging question to me now. Why, I'll tell you. Particularly railways, the spending has been good, but next 1 year we are going to see that elections are going to come, and I feel that the projects awarding the procedure and the work on every front might little bit be slow compared to what is happening right now. So company is doing well, their order book is actually good, but valuation wise it is actually very, very costly. So on every rise you should be booking profits at times. There's no harm booking profits. And then as we progress into elections, slowly you should start adding up railway stocks. So railway stocks as a pack is too costly, but market can be insane for longer periods, and hence it might go up even if I say book profits, but actually it's costly.
Okay, fair point. All right. On that note, gentlemen, thank you so much for taking the time and for answering all the questions that you did. And viewers, we have to close now with 2 minutes to 12 o'clock. But we'll be live tomorrow at 11:30 and we'll start taking questions right at the onset. So do tune in at that point. Of course, through the day, we'll be live with markets and everything else in the world of business. So watch out for all of that on our social media platforms and also on the website bqprime.com. Thank you so much for watching.